This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com. Okay, we're going to look at a question from the December 2010 F5 exam. So make sure you got the question in front of you and have a look straight at the requirements. Part A, calculate the full cost per unit for products A, B, C under traditional absorption costing using direct labour hours as the basis for apportionment. And Part B, calculate the full cost per unit of each product using activity-based costing. So those two parts are very standard for activity-based. Part A using traditional absorption and Part B using activity-based. And neither Part A or B require any writing at all. It's pure calculation. Part C, for 6 marks, using the calculations, explain how activity-based costing might help them improve the profitability of each product. We'll worry about the Part C later. Let's get straight on with Part A and B. A, they want the full cost per unit, traditional absorption. Well, let's get some easy marks first of all. Let's set up the cost cards. First of all, materials, and then labour, then overheads. For materials, though, if you look at the top table, the third line down says raw material usage in kilos per unit. So product A uses 2 kilos of materials. And if you look below the table, it says the price for raw materials remain constant throughout the year at $1.20. So each unit of A, 2 kilos at $1.20 is $2.40. Similarly, B is 3 kilos a unit at $1.20 is $3.60. And finally, C, 4 kilos a unit, again $1.20, $4.80. So that was easy. Let's turn to labour. Very similarly, A, on the top table it says labour hours per unit 0.1, and below the table the labour cost for the whole workforce was $14.80 an hour. So 0.1 hours for A at $14.80 is what? $1.48. Similarly, B, and I'll need my calculator here, 0.15 hours at $4.80 is 0.15, $14.80, sorry, is $2.22. And finally, C, 0.2 hours at $14.80, $2.96. So, of course, they were straightforward, but where the problem, where the work comes, is overheads. So, let's do our workings for the overheads. And remember, it's traditional absorption using direct labour hours. So the overhead cost per hour will take the total overheads and divide by total hours. Well, total overheads are easy. There's that second table. It says the annual overhead costs were as follows. So it's simply the total of those. 26,550, 66,400, 48,000, 54,320. So the total overheads are how much? I think 195,270. To get overheads per hour, we need the total labour hours. And how can we work that out? Well, we know the hours per unit from the top table. And we also know the first line of the top table, we know what the production was. So, let's add them up. For A, we're making 15,000 units. each one is taking is it 0.1? Yeah, 0.1 hours. So 1,500 hours. Similarly, B, 12,000 units, 0.15 hours each is 1,800 hours. And similarly, C, 18,000 units, 0.2 hours is 3,600. So the total hours that we're working, 1,500, 1,800, 3,600, 6,900. And so the absorption rate, or the cost per hour, simply divide 195,270, 6,900 hours comes to a rate of $28.30 per hour. Now we can go back to our cost card and we'll charge the overheads at $28.30 for every labour hour. So again, product A, from top table it takes 0.1 hours per unit. At $28.30, that's what? $2.83. Back to my calculator, product B is 0.15 hours at $28.30 is $4.25. I'll keep to the nearest cent. And product C, 0.2 hours at $28.30 is $5.66. Which gives the full unit cost A, $6.71, B, $10.07, and finally C, $13.42. So there's part A. 5 marks. It's a bit of a rush, but it's very, very standard. So apart from the time it takes to find the figures, there should be no problem with the approach. However, let's turn to part B, where again we want the full cost per product, but this time using activity-based. Well, again, I'll set up my cost cards, get an easy mark. Materials and labour exactly as before, so we don't need to repeat the arithmetic. Materials, 243.64.80. Labour, 148, 222 and 296. And I've forgotten the last one. Was it 296? Yeah. Again, the problem is the overheads. And so, again, we'll turn to workings. Now, you can do the workings in two ways. You can either go straight to a cost per unit, but I always find that takes too long and more likelihood of mistakes. Or what we're going to do, we'll deal with the overheads in total first of all, and then get cost per unit. So I'm going to do it in total. We'll take the total overhead in each case, and we'll split it between the 3 products. And so go one by one. The first is the setup costs. In total, they're 26,550. and we're going to charge that between the three. And to charge it, we'll split it on the basis of the number of setups there are for each product. Now, okay, a bit of terminology, but we are given in the top table the number of production runs. And so fairly standardly, every time we have a production run, it means we'll need to set up. So how many production runs have we got in total? 16 for A, 12 for B, 8 for C. So add them up, there are a total of 36 production runs. So the cost per production run it's 26,550 in total. In total again, the number of production runs, 16 plus 12 plus 8 is 36. So every production run is effectively costing us, I think, 737.5. And so let's charge it. Product A has 16 runs, and so at 737.5, we'll charge a total to A of 11,800. Now I'm not going to show the workings for each of them, but in the same way, product B has 12 production runs in total, and at 737.5 that comes to 8,850. And finally C. How many? 8 production runs at 737.5 is 5,900. And so a similar approach for each of them, but be careful, it's the next one where people do silly things. The next one is the machine running costs. In total it's 66,400. And how are we going to split that? Well, presumably on the information given, what you'd expect to be causing those costs are the machine hours. Fifth one down in the top table, we're told the machine hours per unit, so we'll assume it's machine hours that are giving rise to the running costs. But we're only given the machine hours per unit. We need to know how many machine hours there are in total. So I'm going to need more workings here. The machine hours, well, we have 3 products. Product A, we're making 15,000 units, and each one's taking 0.5 hours, which is 7,500. Product B, we're making 12,000 units. Each one takes 0.7 hours, another 8,400. And product C, 18,000 units. Each one takes 0.9 hours, which is how many? 18,000 times 0.9 is 16,200. So the total hours are working is 32,100. Well, as I said, we're going to charge it based on machine hours, so the cost per hour the total cost is 66,400. Divide by the hours 32,100, which comes to an hourly cost of, I think, 2.0685. And so again, let's charge the products. Product A in total, what can I do this right? 7,500 hours at 2.0685. In total, I'll charge to A $15,514. Again, I'm keeping to the nearest dollar here. A bit of rounding doesn't matter. You'll see at the end, it makes absolutely no difference at all. In a similar way for B, in total, it's 8,400 hours. At 2.0685 comes to 17,375. And finally C, 16,200 hours. 2.0685 is a total of 33,510. Okay, that was machine running costs. Next one, procurement costs. In total, 48,000. And what does it cause? It's procurement. Procurement is buying. So presumably, back to the top table, it's the number of purchase orders. And so we'll work out a cost per order. It's 48,000 in total. How many orders are there? 24 for A, plus 28 for B, plus 42 for C. I get 94. I better check that. 24 plus 28 plus 42. Yes, 94. So the cost for each order, divide, and I get 510.6. Charge it to each product. A, there are 24 orders at 510.6 gives us how much? 12,254. To C, it's 28 orders at 510.6 is 14297. And finally to C, 42 orders at 510.6 21445. Nearly there. Incidentally, those three don't add up. If you add those up, 12,254 plus 14,297 plus 21,445, it actually comes to 47,996, not 48,000. Well, that's because of rounding out fairly obviously, and if it upsets you, by all means do it to more decimal places. But you'll see shortly, it makes absolutely no difference. A few dollars rounding here will make no difference at the end. Anyway, back to the question. The last cost is delivery costs. The total, the second table, 54,320. Sorry about that. I don't know what I pressed. Anyway, 54,320. And here, I think fairly obviously, we'll base it on the number of deliveries to retailers per annum. So the cost per delivery $54,320. How many deliveries are there? 48 for A, 30 for B, 62 for C, a total of 140. So the cost per delivery, $388. It's the last one, so again charge it to A, 48 deliveries at $388. 18,624. To B, 30 deliveries at $388. 11,640. And to C, 62 deliveries at $388. 24,056. We've now charged all the overheads, and so let's add up for each product. Product A, 11,800, 15,514, 12,254, 18,624 is 58,192. To B, 8,850, 17,375, 14,297, 11,640 is 50,162. And C, um, 84,911. One step left. Those are the total overheads for each product. We want the overheads per unit. So how many units are we producing of each? It's 15,000 A's, 12,000 B's, 18,000 C's. And so the overhead cost per unit divide to A, 58,192 over 15,000 units is 388 to the nearest cent. To B, 52,162 divided by 12,000, $4.35. And finally to C, 84,911, 18,000 units, $4.72. And I think I've made a minute. Hold on, let me check my addition there a minute. 5,900, 33,510. Divide by 18,000. Yep, 472. Now we can go back to the cost card and finish it off. 388, 435, 472. I want to forget these. 388, 475. And 472 gives a full cost per unit to A of $7.76, to B $10.57, and to C $12.48. So there we are. We've done part B, the full cost using activity-based. Finally though, what about part C? And don't ignore part C. It may only be 6 marks. And as it happens, I know I've got parts A and B right, so I've easily passed the question. But it's so easy in the exam to make a silly mistake. You can't afford to waste part C. And part C, there's no reason you shouldn't get full marks, even if you'd got the figures wrong in A and B, if you're talking sensibly about your figures. But what does it ask? It asks how activity-based costing may help us improve profitability. Well, all we've got so far is the costs under each method. But if you look back at the table at the top of the question, we do know the selling price of each product, so we can look at profitability. And so let's just work out under both methods, what profit are we showing? First of all, under traditional absorption, The selling prices, A, $7.50, B, 12, C, 13. And what were the costs per unit? Well, from part A, $671, $10.07 and $13.42. Remember the last one, $13.42. What were the others? $10.07 and A was $671. And so the profits per unit under that approach, A, a profit of, I think it's 79 cents. I better check. 7.50, 6.71. Yeah, 79 cents. B, $1.93. And C's loss making, a loss of 42 cents. That was under traditional, but when we did it again under activity based, again the selling prices, 7.50, 12, 13, but the costs were different. See if I can remember them this time. 7.76 and 10.57. And what was it for C? 12.48. And so the profits per unit using activity based, it's A that makes a loss of 26 cents. B makes a profit of $1.43 a unit. C makes a profit of 52 a unit. Now, why is it happening? The points you should make, the points you must make, excuse me, are that activity-based is much more what you might call accurate. Activity-based costing charges overheads on the basis of how they're used. That's point number one. It's a much better way, in principle, of dealing with the overheads, of getting the cost. How may it help them improve profitability? Well, we can use our figures to illustrate, but if we've got more accurate costs, we're able to make better decisions. Based on profitability. And let's illustrate it with our example. On our example, using traditional approach suggests that product C is loss-making, whereas in fact, using activity-based, it is A that is loss-making. And so what could we do to improve profitability? Surely it's product A we need to worry about. We should try to increase the selling price. Or, of course, reduce costs. Product C we've no problem with. It's making a profit, and of course product B doesn't make any difference to product B. It's profitable under both approaches. Finally, though, do make some suggestions to why this is happening. Why is product A becoming loss-making when we did activity-based? The reason is, or the reasons, look at the table again, where it says number of production runs, number of deliveries. On both of those, A is having a lot more production runs and deliveries. And that's what's causing the problem. That product A has too many production runs. I mean, just look at the production runs. Product C has 18,000 units and only 8 production runs. A, we're making fewer units, 15,000 units, and yet it's got 16 production runs. And it's that more than anything that's creating the problem. So we need to, if we can produce with fewer production runs, if we can be more efficient. If there are fewer production runs, there'd be less of the overheads charged to A. That would bring down the overhead cost to the product cost. It would go some way to making us more profitable. If it's not possible, well, if A is loss-making, we should at least consider stopping production of A and making more of B or C. I say consider, maybe we can't make more of the others, but it's A we should focus on. Whereas under traditional absorption, it would appear that it was C that was the problem. It turns out it isn't. Anyway, I've enough there, certainly, for the 6 marks.